Alright, let's see if we got a better connection this time. Alright, everything's acting better now. Okie dokie. Sorry for the mix-up, folks. We were having some horrible lag issues going on, but now everything is running smooth as butter. So, just to recap, since most of you probably didn't even hear what I said, it was lagging so much. Monday, we had a nice gap up and a flag on the cash session. Then another gap up yesterday to key level 3773 and the top of an hourly squeeze. As we try to teach in here, whenever we're at the top of an hourly squeeze, near open and at a key level, we'll likely reject and come back for at least a partial gap fill, if not a full gap fill. And it looks like we got that full gap fill, right? Right down to the highs from Monday for a bounce. Even came back to set a higher low and carried up into close and up higher on that Netflix earnings. Overnight future session, we got up to that 37.73 again and rejected to come back down to our lows from yesterday near 3700, 3708. If you look, there's also a trend line, not from the extreme lows because we kind of broke through that yesterday, but from the next candle after that big wick down there to where we kind of stopped on Friday. That's where we're testing right now. So this could be the first early indications of a breakdown. Let's take a look real quick at our economic calendar. For today, we don't have much except building, housing starts, so some, home data. And then Beige Book around 2 p.m. We have a Fed speaker at 1 p.m. Beige Book could cause some interesting reactions, Fed budget, whatnot. Tomorrow, some jobless claims, some more Fed speakers. Friday, some inflation data. So, for today, and I'm going to try to move through these kind of quick since we had to get a later start with that first session being kind of slow. So for today, get out your notebooks. Let's see if we can hold this trend line going into open. I would frankly allow a dip to the bottom of this 4-hour squeeze, which is starting to form, 2-hour squeeze. Is this one an hourly? Okay. So we're at the bottom of that hourly squeeze. Just like yesterday, we were at the top of a squeeze and rejected. We are at the bottom of a squeeze and could bounce at this trend line, but the 1-hour squeeze is getting a little thin. We could slip through it down to this 2-hour squeeze into this daily 15 and daily 8, which have crossed over today. When moving averages on any time frame start to cross over, you can get a back test. So I would allow a dip today right to this zone made by the daily 15 and the daily 8, which spans from 3681, I'm just going to call it 3680, up to 3687. So a little 7-point range there that I would be looking for a hold. If we start to slip through this trend line and hourly squeeze, looking for this 2-hour squeeze to hold. If we give that out at all, we're talking about coming back down to 3668 and 3639, probably settling in there. Just because from the Monday night gap up, we reclaimed this 36.21, 36.39 and did not need to come back. So if we give out these moving averages, where we should hold for a bounce back up, then we're coming back to that zone for support. But if we can hold and start to make our way bouncing back up, first stop is to get to the daily 21 again near 37.30, then our key level 37.41, and back up to 37.73, the high from yesterday and overnight. And if we could actually get beyond that, we're talking 3800, 3807 and a half. And we've got a daily squeeze up above, and that daily 50 still up above 3900. So overall, let's see if we can hold 2-hour squeeze bottom, start to work our way back up to 2-hour squeeze top. On NQ. Clicked on the wrong one. There we go. On NQ, we are starting to, like I said, give up the trend line from extreme lows, but if we draw a less extreme trend line, not much better. Try. Yeah, right about there. Man, come on. There we go. So, on NQ for today, I'm just going to go ahead and get rid of this trend line since we are a little below it. On NQ, we're pulling down to the daily 8, the daily 15 still above, so they haven't crossed over quite yet. Basically, on NQ, I would only allow it to get down as far as about, 11,050, maybe a slip to 11,000. Kind of where we open the day on Monday. But about that 60-point range needs to hold if we do keep slipping after open. As long as we can hold there, I'm looking for us to bounce back up to this 11,200, to the daily 21 at 11,350, with the goal of getting back to this 11,500. If we start to give out this 11,060, coming to 11,000, and if that can't hold, then we're talking back to this 890, 940 zone for support. Alrighty. Almost got to the daily squeeze top yesterday. Just like the other indices at the bottom of a 2-hour squeeze. So already I'd like to see it stay above 1735. If we start to give out 1735, we're coming to 1724, 1720 to test the daily 15. If we can hold up at that 1735, looking to get back up through the daily 21 to 1750. And try to get back to yesterday's highs around 1780. With obviously yesterday's high up at 94. YM. Not so bad on the gap down. Kind of near yesterday's lows around around 350 to 3,400. Let's see if we can hold there. If not, likely coming down to this 3,200 and 3,100, where the daily 8 and daily 21 sit. So if we start to lose squeeze bottoms, we might be coming to that those two moving averages for a test right around 30,100. If that gives out cycle level 30,000, And should that give out, then we're probably coming back to this 29,650 and the daily 15 at 29,787. But if we can hold up near these squeeze bottoms and stay above 30,000, looking for YM to work its way back up to 30,500 and 30,800 near yesterday's highs. Apple. Apple's going to be key today. We had that news come out almost like when it should have come out, as we were slowly grinding back up and arriving back at the daily mean. Oh, here comes some bad news on Apple that drug the market down for that second drop that kind of gave us the W in the market, right? But it did a good job recovering right back up to where it kind of was oscillating around at this 144 and a half, 145. Obviously gapping back down near the lows yesterday. On Apple, it's pretty simple. We need to hold 140, 141. If we can't hold 141, coming to 140. It's like yesterday. We got down to 141. We got halfway to 140, about 140 and a half, and then bounced. So if we can't hold 141, coming to 140, and if that gives out, probably coming straight down to 138. This is zone below. But really, if we digest the data like the market did, Apple is just lowering its production numbers for the new model. Still, all the stuff that Apple provides, we didn't hear much about that, just the new model of the iPhone. And we kind of already knew that demand was down, right? The number of people reserving it, or whatever you might want to call it, was down, and we already knew that. So for them to cut production numbers on it, it's not surprising. Yes, there's a negative reaction, but sometimes that reaction is just to take profit, pick it up again, right? So very simple. As long as we can stay above yesterday's lows, that data, to me, is digested, and we can see Apple pop back up to this 144 and a half, 145 zone that it was at yesterday. If it can push past that, the goal right now is 147 and a half to the upside. But if she gives out, 138. AMD. Just like everything else on the market yesterday, and I've been talking about AMD holding this 56, very big key level. Held it for days on end. And on Monday, it gave that little flag. With the gap up, we get to 60 at the top of the squeeze. We come right back down near 56, right? It was a great short yesterday on AMD. I think some folks in the room caught that. But much like everything else I've just covered, as long as AMD can kind of hold up above yesterday's lows at the bottom of the squeeze, if we do get a little dip down there, 56, big strong level. So that's where I would be taking a long position back up to 58.73, where the daily 8's almost caught up to 60 and beyond. One thing with AMD with chips, after the bell today, we have IBM and Lam Research, right? LRCX. So we had MU a couple of weeks ago, I think it was, and LRCX kind of the next in line to report earnings. AMD reports the 1st of November. AMD and then NVIDIA is usually last. So she might just be, well, for one, it could be a good sympathy play with LRCX. So definitely keep an eye on AMD. If she does get down there 56, it would be good to pick up some calls just in case the LRCX earnings go well. It could be a nice sympathy play where she gets right back up to 60 and tries to push further. Amazon. Big old push off of 106. Covered that in Sunday night's prep, even though we didn't quite get it during the cash session. But it is where we ended up settling on Friday. So, at least open around that 108 and made it all the way up near 120 yesterday when she opened. You're always going to have a little profit taking, and a pullback to these daily moving averages is healthy now that we are above. So, if we can continue to hold them, we can talk about further higher on Amazon. She does not report till the end of the month, right? So we got a couple of weeks, or at least a week. So let's see if she can hold 115 where the daily 15 sits. I would let her slip as low as 113.5 where the daily 8 sits at the bottom of this 2-hour squeeze. Sorry, 1-hour squeeze. But as long as we can hold around that 113.5 or that 115, I'm looking for Amazon to bounce back up to the daily 21 at 116.5 and back up to the highs near 120. Past that, the target is 122.25 near these highs from the last rally. If she gives out that 113.5 and the market itself is kind of giving up squeeze bottoms, then we're likely coming back to 111.5 where that first Keltner to the downside sits. We would still kind of be above where we opened on Monday there. On BA, nice overall trend continuing higher. Easily draw a little trend line here. We're just barely starting to poke below. I know I left out that big drop on Friday, but just kind of where we left off, we have been riding that up. So for today, we really need BAA to hold up above 135, let's call it. Just right near yesterday's lows at the bottom of this 1-hour squeeze. If she starts to give up 135, then we're likely coming down to this 134-ish where the 2-hour squeeze that's forming sits and the daily 8. But we'd love to see it hold above that 135 near the daily 21 and start to make its way back up to 138.5 recent highs, cycle level 140 at the top of the squeeze. But definitely keep an eye if she starts to break down. Could get a little interesting. Kind of opening right at that trend line. So let's see if we can get a quick pop on BA to come back and try to fill the gap and get near pre-market high. It could be a good sign for the market. Cat, same thing. On a nice trend up, even though she dumps and then gaps up and dumps and then gaps up and dumps. I guess Cat's really favoring the swing trader this week. So let's see if it can hold above 180, and where that daily 8 sits at the bottom of this tiny little squeeze that's forming. You know, as long as Cat can stay above 180 today, maybe it could make a move during the day instead of just slipping back. But we'd like to see it hold 180, make its way back up to 185. Or at least that 183 where that daily 50 sits. She gives out 180 coming back to the daily 8. Well, if she gives out 180 at the daily 8, coming back to the daily 21 at 178. And maybe even 176 where the daily 15 sits. Near that squeeze bottom. Coin. Kind of the same thing. With the gap ups, sells off. Had a gap up to the 50, sold back to those moving averages. Those puts moved pretty nice yesterday, the 70s. Off our B system. So, coin back down below and rejecting its moving averages. Gapping down below yesterday's low. If she keeps slipping, likely coming down to test Friday's lows around 63.5 And past that, back to 61.83 at the bottom of this 4-hour squeeze. But if she could find her feet, around 64.5 maybe, kind of hold the gap from Monday. Maybe she can start working her way back up to these moving averages, back up at, 68, 69. Google. Yeah, Google pretty simple today. Would love to see it hold 100. If we start to give out 100, we're likely coming back to about 99, where the daily 8, daily 15 sit. This 98.78 key level at the bottom of this 2-hour squeeze. But if we can hold 100, get back through 101, that would be a great sign of getting back up to 102, 103 at the top of this squeeze. GS. Going to be opening near yesterday's little gap up. Let's see if she takes a quick dip. Basically needs to stay above 307 and a half. She did report earnings yesterday. As long as she can stay above the daily mean at 307 and a half. Looking forward to get back up to 315, 320, 325, where the daily 50 sits. You can see on the gap, on the earnings gap up, tag the daily 50, coming back. As long as we can hold that daily 21 and start to bounce, we could make that journey right back up to the daily 50. If we start to lose the daily 21, coming back to 305 at the daily 8, 302 and a half at the daily 15. JPM. 102 up to 120. Look at you go. Let's see if it can hold 116 and a half near Monday's highs. Did a good job holding that yesterday. Let's see if we can get it again. And keep trucking up to 120 and 123 at the top of this 2-day squeeze. If she starts to give out yesterday's highs, coming back to 116, 114, where the daily 50 sits. Meta. Look at that. From a key level 123 right up to the next key level 137 and hit the daily mean yesterday. Look at you, Meta. Yeah, a couple of good days. Rejected and came back to the daily 8. Hopefully you guys see now why I track these, and they are built into the tools that are in the tool belt, right? It's pretty easy to come up with a thesis when you're down near third Keltner at a key level to go long, and the target would be back to the mean, right? Because the way Keltners work, we're 1 deviation, 2 deviations, 3 away from the mean. If we can hold and start to reverse, the goal is to get back to the mean, which caught up to a key level. So hopefully that's making sense. Meta, looking for it to hold yesterday's lows, around 131 and a half. If we lose that, coming down to 130 psych level, and beyond that about 128. But if we can hold 131 and a half, which we're gonna be opening above, looking for it to get back up to 134 and a half, where the daily 15 sits, in 137, that key level where the daily 21 still sits. I need to get going a little faster. I didn't realize the time. Microsoft, looking for it to stay above 235. If it can, get back up to 240 at 241 and press to 245. If we lose 235, coming back to 232. Netflix, big old gap up, going to be opening in the middle of the previous earnings gap. Looks like she shot up past third Keltner's, almost to the daily 200, coming back. On this one, big gap up. Probably going to be some profit taking. Need to let it settle. Wouldn't be surprised if they brought it back to the 252. Wouldn't be surprised if they only brought it back to like 265 or 260 and bounced it and kept going. It's going to be a little bit of a struggle, but with our beast tool on the equity, it's going to help out a ton today. So I'll try to call out what I can on her, but I might not trade her today. I want to see where the premiums open and how much they crush things on the video. Much like AMD, made some nice moves. Basically looking for it to hold up 116 at the bottom of the squeeze and right near the top of this support zone. If we can hold up there, looking to get back to 120, 122 where the daily 15's at, and 125-ish where the daily 21's near. QQQ. Pulling back near yesterday's lows, looking for that to hold where the daily 8 sits at the bottom of the squeeze. Basically hold above 268. If we can hold above that, looking to get back to 272, 275. This is the zone that we kind of rejected yesterday, and beyond that, 278 at the top of the squeeze, 280. SPX. Pretty much made it back to fill the gap. Today we're going to be gapping down near that. So basically just looking for, about 36, 65, I'm going to say. Looking for it, 36.65 to hold, get us back through 3,700, back to the daily mean at 37.15, and try to get back to yesterday's highs. If we break that 36.65, could be coming back to 36.20. SPY. Near yesterday's lows, 368. On any dip or further down, we need 365 to hold. Got the daily 8 and 15 will be stacked there and probably flipping at the bottom of this 2-hour squeeze. As long as we can hold there, we could see a recovery back to 370, 374. If we start to give out 365, coming back to 362, potentially 360, this next zone. Tesla has earnings today after the bell. Let's see if she can hold above 216. Work our way back to 223, 230. The high from yesterday. If she starts to give out that 216 and the bottom of this squeeze, probably coming back to 210, 206 zone below. UVXY. For us to get a nice bounce, come back to fill the gap, and maybe see some upside, we need UVXY to stay below 12.5. I'd say maybe as high as 12.6 at the top of the squeeze. If we can start to reject there and come back, looking to take out this 12.15 and 12 at the bottom of the squeeze, maybe even start pressing below 12. But if we're going to continue this downtrend and slip further, we'll probably see UVXY get back up to that 12.5, 12.6, and maybe try to press through it back to 13. On VIX, made it down pretty close to the daily 21 yesterday, around 30.5. I like that we're opening at the top of this thick squeeze and the daily 8 on VIX. So, for us to catch a bounce and start heading back down, ultimately looking for VIX to stay below 32. Yesterday's high was near there, but would love it if we stayed below 31.75-ish in the squeeze top, and even this daily 8 at 31.5. So for some upside, we need to see VIX reject the squeeze top, 31.5, 31.75, and start to make its way back down below 31 and back to 30.5 at the bottom of the squeeze. If we're going to see more downside, then we'll see VIX probably push back to yesterday's high and 32, and maybe try to push past to 32.5. But Tesla is big earnings, folks. So with tight squeezes on everything, it could be an inside day where we bounce from squeeze top to bottom. So good luck today. Thanks for tuning in. Sorry for the technical difficulties with prep, but we got it out with a little time to spare. Good luck today, folks, and we will see you in the chat.